Video. Before I talk a little bit more, I had a hard time getting Restream up, you guys. I actually was updating my computer overnight, and a lot of my saved things were actually not saved correctly. So I'm gonna have that available on Monday. So I just want to let you guys know that I'm not gonna be able to take your guys' comments today. This is gonna be more so just giving you guys a lot of information. And if you guys have any questions, please feel free to put in the Discord afterwards. I'll be able to do private chats, and I'll be able to talk any more things moving forward. So that being said, we're going to be talking today about some really intriguing stuff. We're going to be talking about hedging, we're going to be talking about market analysis, and we're going to be talking about risk management. Okay, so a lot of the big things before I get into this live stream, I want to talk about risk management in general. This is just basically the biggest strategy you can have. I mean, it doesn't matter if you're the best trader in the world. If you don't have proper risk management, you're not going to last long in this business. Just like if you're a basketball player and you don't have if you don't have a jump shot, you're not going to last long in that business. You have to be able to be very discipline when it comes to trading, and by being disciplined you have to be able to define what markets are best for you first off, and then secondly being able to take trades and be patient before those trades are actually being produced. Okay, so that being said, you guys, I'm going to go straight into it, and then we're going to just talk a little bit more risk management later on. And I'm going to talk about some of the risk management that I do and some of the analysis that I do before I get into my investments. Okay, so first I want to talk about the risk management. So your safety net. So a bulletproof risk management regimen is a paramount to a successful trading strategy, right? So even the best trading strategy in the world eventually will blow your account. That's why you have to have a risk management capital, right? So that being said, there's things called stop losses and stop loss orders, and there's trailing stop losses, which we talk a lot about in the Discord when we get into, and I'm gonna tell you guys how I do my trading stop losses as well. So going straight into it, you guys, is that when you are making your trading strategy, for instance, you want to have a defined percentage you have in your account, right? So say that you have a $100,000 account, so you're basically wanting to lose between risk to reward, you want to do at least 3 to 1, right? 3 to 1 would be your bare minimum trade you would take for you to gain capital, right? For my trade, I do 3 to 1s and higher, right? That's what I usually look for when I'm getting the markets. Reason being is that if I lose 3 trades, on the 4th trade, I can gain back those 3 losses. So I am always, so it's just like if you're in the casinos and stuff like and so forth, you have to have, since this is a speculation market, which is unpredictable, you have to have an edge, right? And our edges are barely anything above the average market player or market strategies in any aspect, right? So the biggest thing is having good risk management. So this risk management thing is that when you have risk management, and especially when you start managing portfolios, managing companies' portfolios, and even managing your own portfolio, you're going to have limited risk, right? Limited risk, and you have to hedge against other investments that you have in your portfolio. Reason being, it helps you with your risk management. So moving into it, so stop losses are really simple, right? Stop losses is what you put your trade under, right? If I were to put a trade on the Euro USD right now, and we have open position, for instance, it would basically mean that, or even if I was on Ethereum, right? You would put a buy order here and you put a stop loss. So you guys know this. Most of you guys already know the basics of trading in general, right? So I'm just giving you guys reference on how it basically works for risk management. You don't want to be risking more than 1 to 2% per trade, right? Reason being is that if you are risking more than that, psychologically you're going to be more attached to that trade, right? It's just been proven by science. The more money you put in, the more your heart rate goes up, the more your neuroreceptors start to active, the more you get in that fight or flight mode. It's just been statistically proven that people that trade with heavily or really bad risk management tend to be more stressed out, tend to not be able to sleep at night, and so forth, right? Because you're trading with money higher risk than what you really need to, right? If you do compound interest at a 2% risk management, you should still be able to make a lot of money, right? If you have a 10 to 1, a 11 to 1 trade, right? Like a lot of the signals that I give you guys. I mean, I'm giving you guys some really good signals, right? For 115 pip gains, 117 pip gains, 50 pip gains, like these trades, you don't need to put that much money on. I mean, I understand you want to get rich, you want to get rich quick, but essentially there's a polarity in that, right? I've been there. I've gone down that road. I've, had those days where I made $7,000 in a day, and, I was freaking like, oh my God, I made more money than I did, working as an EMT and working at a hospital, right? Like, that was like a lot of money at the time, but at the same time, you get caught into that greed factor, and that's what causes people to lose their accounts so quickly, you guys. Is that they get determined by their greed, right? Nothing's ever enough. So when nothing's ever enough, you're gonna always constantly keep on putting money in the market, and then eventually you're just gonna keep on losing and losing, because it doesn't matter how good your trading strategy is, it matters how good your risk management is. Okay. So when we're talking about risk management, I mean, in general, like, risk management is essentially something that we all have to go into, right? It's just something in your life you have to know, right? You have calculated risks, and then you have dumb risks, right? A calculated risk is like, okay, well, if I were able to put this money aside and not buy, whatever and so forth, right? You're sacrificing that, you're taking a risk, right? To be able to get the reward later. A dumb risk is just having non-calculated aspects and just trying to go out there and obviously hope for faith that you'll win. It happens sometimes, but you're gambling, and then the percentage value. I mean, everything is down to percentages at the end of the day. So if you have a low percentage of that happening, you're not going to be able to sustain that type of momentum, right? You're going to lose your accounts. You're going to blow your accounts eventually, right? I've blown many accounts in my trading career, so I'm telling you guys that this is how it works, right? And I'll tell you from my experience. When I first started trading, right? I was just going really hard. I was doubling my money, tripling my money, and then when I won 5 or 6 trades, I would be like, my risk management should be like, if I lose this trade, I lose like 13% of my account, or 15% of my account, or 20% of my account, like off one trade. Like, think about that, you guys. That's what happens. And then when you lose that trade, what do? You get into that revenge cycle. Oh, I can get it back if I just double my money, right? You might win that time, but then you're not going to get into the right state of mind. You are embedding that into your subconscious mind that it's never enough. So what's going to happen? Your subconscious mind is going to take over, and it's always going to consistently tell you it's never enough. It's never enough. It's never enough. So it's a cycle. You're going to live in that cycle until you lose all your money. And then you have to learn, like, oh, wow, maybe that wasn't the best idea. So, like, it's a learning lesson, you guys. You have to learn that, because I don't want you guys to blow your accounts. I don't want you to have to lose your money and go back to living your day jobs or whatever. Like, I want you to be able to sustain, live, comfortably, and have a prosperous future by trading your own capital and making money. But this is a business at the end of the day. You have to treat this like a business. Even though you make money at a click of a button anytime, and the Forex market is literally 24 hours, Monday through Thursday, closes at 2 o'clock Pacific Standard Time. Like, yeah, of course you're going to have that temptation, but that's why 90% of traders lose their accounts in 90 days. It's because they have that worry, that greed, that fear in their mind that always is constantly telling them it's never enough, right? It happens in all aspects in our life. It could happen in our job, it could happen in our relationships, it could happen with our finances, it could happen with our own self-image, right? It's all psychologically interconnected, right? It's an interconnection that's higher than what most people think it is. So that's why I say psychological aspect in the markets is 90%, right? 90% of the market is psychological. 10% is technical analysis, or you can say 5 and 5, 5 fundamental, 5 technical. Really, it's all in your mind. It's all about completing and creating that conscious mind. And this, what I'm talking about, you guys, is risk management. So we can talk about percentages and what percentages should I be trading and how much money, but I'm telling you, this in general is your risk management. You have to train this first before you're able to succeed in these markets, because I mean, personal development, a lot of people say it's, woo-hoo, but it really can help with your success in your finances and also in your businesses. Because when you know yourself, your own self-belief will make that manifest into your reality. So a stop loss, we already talked about stop losses. You guys know what we're talking about. Trailing stops is a huge thing about risk management, right? So I'm not going to go into the nitty gritty. You guys know most of this stuff. I'm just going to be talking about the basics, and I'm going to be talking about hedging and which pairs are good to hedge against other currencies as well, or other futures and so forth. So moving forward, trailing stops are when you're in profit, right? You're in profit, you want to be like 10, 15 pips in profit before you put a trailing stop. Trailing stop is basically whenever you move up a certain percentage value, your trailing stop will keep on moving up higher. You guys know about trailing stop. So that helps with risk management. A golden rule that I like to use, and sometimes I don't use, you guys, since I know a lot about the financial markets, and since I've been doing this for years now, and I've been studying the market every single day for the last 4 years, I would say that some of the times when I know that there's a huge trade, I'm going to go a little higher than I usually do. I mean, I'm not going to take the fun out of this, right? It's supposed to be fun as well. So, dude, like for instance, like last night we saw a USD JPY trade, and for instance, like I've seen this trade since I've been trading, like at least 1,000 times, right? I saw that the market came down on a Thursday with a market reversal, making a huge evening star pattern. After this evening star pattern, I saw a MACD in synchronicity with that, with a lower low on the MACD and also lower low on stochastics. I saw a moving average blowout, I saw market be in synchronicity with all three. And knowing that the market is probably going to reverse and going to have the same aspect of this, I made this position, right? That's why I put it into the Discord. I said buy position 108.702, target 109.250, right? Stop loss 108.450, right? That was my target, right? So same thing. So I saw it came down to what? 108.500. That I was like, this is perfect. I know the market's gonna go that way. I don't know, but I have a very, very defined knowing in my confidence, right? So I did a heavier lot size. I doubled my money actually, right? So I doubled my entry, right? So then I got a lot more money. But I don't do that every single time, because if I were to do that every time, I would blow my account. I know that. So I don't do it every time. But when I see like high probability setups that I know are usually going to go that way, that have a very little to small percentage is not going to go against it, I do. But I don't put my second position in until I see confirmation on that fourth candle, right? That fourth candle gave me confirmation. So that's how I'm able to define and make better market trades, right? And for my, like that was a $17,000 game with the company, right? So that was like a big trade, but we're able to make that, right, through being in precise synchronicity, right? We're not being out of chaotic and greed. We just know that there's high probability setups that we see over and over again, especially when, like for instance, Kobe Bryant could miss every shot the whole game, but he knows that there's one part of the court that he can make money, that he can shoot and make that shot 90% of the time, right? That's the right shoulder, right? That's his spot, right? His right shoulder, he can pop on that right shoulder and make it basically every single time. That's like his shot. So it doesn't really matter, you guys. You just have to be very, very cautious of what trading strategies you have and how you're able to implement these strategies. And like I said, you guys, I really appreciate you guys being on today's live stream. If you guys are tuning into this, and the reason why I haven't been able to answer you guys' questions is that my restream wasn't working today, so I'm going to be having that available on Monday, so I'll be back to normal. Just for some reason today it wasn't working. I had to reset my computer, and then I have like all of my logins and stuff like that, and I have to go through the system. It takes like 30 minutes, and I was already a little late, so I didn't want to be a little more late than that. So if you guys are on this live stream, I'm not ignoring you. I just don't have my comments up today, and I will have them available on Monday. And if you guys have any questions, please feel free to put on the Discord after this session, and I'll be able to freely ask them after my meeting. So simple thing, you guys, risk management. You don't want to be trading more than 1 to 2%. If you are like a high probable trader, if you guys have money in the bank, meaning you guys already had a successful month, like this was one of my this month was one of my successful months like I had in the last like 6 months. So this was like a really good month for me. So like now that I have some capital growth and capital gain on my preceding trades, I can take a little heavier risk because now I'm working with the money I made. It's not my base capital. It's not my bread and butter. It's not my livelihood, right? I can now take a little more risk, right? So that's why I did that USD JPY trade, and I did double. I did 2 standard lots instead of 1 standard lot, right? So I was doing a little bit more trading. I was taking a little bit more time. So that's just what I want to talk about, you guys. I want to talk about that risk management. So as you guys know a lot about risk management, and this is going to be in the program as well. Some of the work I've done, and I've just been able to research and stuff like that, and just putting it into the best wording possible. So trade risk, key position, it's just positioning sizing, you guys. You have to have great position sizing. You can't be doing if you have a $5,000 account, you can't be doing standard lots with a $5,000 account. It doesn't matter how much marginal size you have. If you have Trader's Way 501, they want you to have that because they want you to blow your accounts. That's the thing. That's why they give you so much leverage. You can't do that. Don't set yourself up for failure. Like, don't. It doesn't matter. If you were to have consistently $300 days, you'll be happier than having a $5,000 day one day and then losing $3,000 the next day and then gaining $2,000 the next day and losing $4,000 the next day. Like, you will go crazy. You don't want to have that on your consciousness because you are trading a market that has to have focused vision. You have to have clearancy, and if you get better, have clairvoyance and so forth. You want to have that. Breathe, get into your solar plexus, get into your foundation before you're getting into these trades, because when you start trading and you start to revenge trade, you start to get greedy, you start to trade money that you can't afford to lose and so forth, you're going to fail and want to quit, right? You're going to get into this point where you're just thinking this market is too hard when it's not that hard. You're just making it hard up in here in this area of your mind. You're making it super hard. You can't do that. You have to be very, very disciplined mentally and psychologically, right? Which is kind of the same thing, but you know what I'm trying to say. So you could be able to do small positions, initial stop loss. So in general, like what this is, you guys, and this is basically gonna be a part of the program that I'm giving to you guys. It's a risk management course, right? So it's basically gonna teach you guys all the risk management you need, all the things what to do, what able to do, your stop losses, your risk management, your percentage value, and so forth, right? So this is going to be available to you guys, the ones that are going to be a part of Traders Profit Club and are going to buy our program when it's available up and available for you guys. So, you know, this is just basically giving you guys a lot of this information that I've been able to calculate and some of the risk methods and strategies that I've been able to come up to so you can be able to stay profitable, okay? So that's enough with risk management. I want to talk about hedging now, okay? So hedging the markets essentially is something that I like to do when I have heavier lot sizes or I'm doing a lot of swing trading, right? So as you guys know, there's things called hedging. So hedging is basically when one market, so think of polarity, right? Polarity means that there's always an opposite that has the same amount of force or gravitational pull to make that structure, or basically saying that it has enough power to be able to control each other side, right? It's just like yin and yang, right? Everything in the world has two sides, right? If I were to put up this book, this side of the book is the same thing as this side of the book, right? It's polarity, right? So for instance, everything in this universe is based off polarity. So that being said, since polarity is an aspect, then hedging is an aspect too, because all you're doing is that when the dollar's down, gold's up. When gold is down, the dollar's up. When oil is down, dollar's down, right? So that means you have other adversaries and other instruments that I do. So what I like to use is gold as one of my biggest hedges, right? So I like to hedge gold against treasury bonds, right? When I see treasury bonds are going down, I like to do futures of gold. I like to see gold going up because I know the value of gold is going to be going higher. That's why when I look at federal rates, I like that these federal rates to see the intrinsic value when it comes to gold in these quarterly distributions, because I know that when these quarterly distributions come out, I'm able to have a finite methodology that can be able to make me a lot of money and be able to hedge my investment. So say that I was long USD JPY, right? So if I'm long USD JPY, I'm basically saying that, okay, probably the gold dollar is probably going to be going down. As you can see, gold dollar was going down. We had that spinning top candle. So we can see that, you know, a lot of this, right? And another one is USD JPY, right? USD JPY is usually congruence or incongruency, or has a opposite congruency as euro dollar, US dollar, right? When US JPY is making lower lows, euro USD is making higher highs. So as you can see, there's a market push to the down upside here, and we can see that euro dollar is kind of making a downside. We already did a take profit here. We already made that trade, you guys. So that was already a 50 pip gain this week. But what I'm trying to say is that there's polarity in most of these markets, right? That's why when you see the crypto market's usually in sync, in congruency with Bitcoin, because Bitcoin is the highest volume indicator, right? It's the powerhouse, just like the dollar, right? It's the powerhouse. It's 60% of all Federal Reserves, right? 60% of all Federal Reserves have dollar-based currency in it, right? So it's the powerhouse. It's what it establishes. 86.2% of all transactions are 82.6% of all transactions are established through the dollar per year. So the valuation is that when the dollar is having a bullish or bearish, you can look at other currencies and look at their economic structures to be able to value that it will be the opposite, making that a hedgeable factor. So that hedgeable factor will be able to give you guys a lot more things, right? So my biggest thing is gold against the dollar, right? After Nixon took off the gold standard, we basically have a fiat currency that's basically printing every single dollar that has no value, right? We're just giving it value by having limited risk factors and inflation factors that determine a similarity or some type of congruency with the Federal Reserve market. But it really, at the end of the day, it's a fiat currency, right? It's a Ponzi currency. Basically, everybody is buying debt, right? You just keep on buying the debt. What you're doing is we're buying debt. So whenever we have a dollar, it's just debt. It's called a federal note. It's a federal debt note, meaning that you have $100 in debt. Basically, you have this to give to your merchants, right? Just like we saw, in the French and Indian War, when the militia, right, were done, they basically the royal king just basically told them, hey, we're gonna give them cards, right? Literally cards, like a card of like a joker or an ace of spades, like a card, right? Like a playing game card, and that's what they used as a currency for their merchants. And then the royal family told the merchants in France, basically saying, if you were to like go against this, we're gonna kill you, right? So they had to use this, but then eventually they saw that there was no intrinsic value, and then there was a revolution, right? So every single fiat currency since the first fiat currency that was made by a Swedish man in 1600, all of them fail at the end of the day, right? All of them fail. That's why Bitcoin and crypto is such a big thing, because that's going to be the next thing, right? We're literally seeing this like when the internet first came out, right? Like this is literally it's growing exponentially, but we're still like at the bare minimum, right? At the very, very, very beginning of it, right? In the near future, we're going to have different currencies, different establishments, things that are going to be able to have more intrinsic value, that actually have a base thing that actually structure it, right? It's not going to be just fiat currencies establishing on other fiat currencies, so the government can just keep on manipulating price and manipulating stock price and keep on controlling all of us in a huge inflated Ponzi monetary policy. But that's just my opinion. Obviously, we all can have our own opinions. But so what I want to say to you guys is that when we look for things, you want to be very, very skeptical. So like when you're looking for trades or positions to hedge, always look at the end value, right? Gold's always going to be here because gold's a value currency or a valued exchange, right? We've been using gold before we even had the dollar, right? So it's always going to be here. Same with copper, right? Copper is used in most of our scientific, inventions, right? Copper is one of the biggest things in this world, right? So these futures, right? Futures are always going to be there because they have value. So that's why I use the futures market to hedge a lot of my currency, my foreign exchange trades. I don't really do futures currencies because spot market has better options than futures market. Future markets forex. That's just my opinion. But that being said, you guys, I'm not going to go really into more depth of that just because I do have a couple things to go through. But when we're talking about these essential things, we're talking about market price and these values, right? So like for instance, like when we see BTC going up, we see price moving higher and higher. We could possibly see that moving to the upside here to retest that 3,500 zone right now, which is a possibility before we see a spike to the downside and then we see price move up. Possibility. When we see that happen, what is the hedge against the Bitcoin, right? We're not going to say Ethereum because Ethereum follows Bitcoin. So does Ripple sometimes, right? Sometimes it does, sometimes it doesn't. It's not fully compatible. But since it is the second highest volume of crypto right now, it does have a high intrinsic value, right? So we have to look for altcoins. There are altcoins that do have a hedge against Bitcoin. I'm not that educated when it comes to a lot of these altcoins. So Naeem definitely is way more educated than me on this. But, when it comes to this different things, just do back testing. Look at different things. When Bitcoin spikes, look at other cryptos that fall, because then you'll be able to understand, okay, if I put this much money here, I'll be able to maximize my profits or my downside if I have a hedging market on a different investment, right? So really cool stuff, you guys. I know that a lot of this stuff was just, I didn't really have a lot of information. I know that I wasn't actually supposed to go live today because I have a couple things, but I wanted to make sure you guys know a lot about, the futures market. You know about hedging, right? Hedging. You know about risk management, because these are huge things that you're going to be able to use in the near future, and being able to capitalize and stay in this market for years and years to come, because we are going to be, changing, people's lives by helping people have that self-sufficient income that they can be able to rely on outside of their daily job or whatever they like to do to make money, right? So that being said, you guys, I really appreciate you guys being on this live stream. I really apologize for not having my chat open. I really wanted to talk to you guys today, but I will talk to you guys in the Discord. Please feel free to put any comments there. Thank you so much for being on today's live stream. Thank you so much for giving me some time, the time of day, and letting me just talk a little bit about what I know on the markets and so forth. But while I'm on here, this Ripple US dollar trade is looking really nice, you guys. Like right now, I mean, I can totally see a nice bullish upside. So I'm definitely going to be putting this, probably going to be my last trade I'm going to be taking for the week, you guys. But yeah, this XRP, this US dollar XRP trade is looking really nice. But moving into that, you guys, I really appreciate you guys being on today's live stream, and I will be in the Discord after this. Have a great one.